The streets of Buenos Aires are buzzing again, but behind the noise lies a story of crisis, reform, hope, and risk. Argentina is at a crossroads. After decades of hyperinflation, default, currency controls, and economic chaos, the new government walked in with promises of change. But the question today is, will the reforms stick? And can Argentina really break the cycle that's trapped it for generations? So let's begin with the problem. Argentina's economy is large, the third biggest in Latin America, with a GDP of around US $633 billion in 2024. Its potential is undeniable. Rich in farmland, energy reserves, and even one of the world's largest lithium deposits. And yet, for years, it has marched the path of economic dysfunction, chronic inflation, deep debt, political instability, and repeated defaults. Take inflation. By the end of 2023, Argentina's inflation rate had soared above 200%, crippling savings and wages. When the government printed pesos to cover deficits, money lost meaning. The peso collapsed. The informal dollar blue market flourished. Business confidence drowned. And debt. Public debt rose above 110% of GDP. The country's borrowing costs soared. Reserves drained. Capital fled. And with each new bailout, hope dimmed. Then came the reform push. In December 2023, President Javier Milei and his team took office promising a zero-deficit rule, deep spending cuts, elimination of money printing to fund government, and the lifting of many currency and capital controls. The results? By early 2024, Argentina achieved its first budget surplus in over a decade. Inflation began to drop. Analysts started talking about normalization. But the road is far from smooth. The decline in inflation and return to budget balance came at a steep human cost. Poverty surged above 50% in early 2024. Formal jobs were lost. Real wages fell. Consumption shrank. The economy contracted before it began to rebound. And by mid-2025, growth had stalled again, signaling the fragility of the recovery. So, what's really behind the crisis? And how does Argentina overcome it? Reason 1. The inflation expectations trap. When people expect prices to rise, they spend today, store value in foreign currency, and the cycle keeps accelerating. Argentina broke the cycle by slashing public spending and ending automatic money printing. But restoring trust takes time. Real wages, jobs, and savings have to recover. Until they do, inflation remains a psychological anchor. Reason 2. Currency distortions and controls. For years, Argentina used multiple exchange rates, heavy capital controls, currency restrictions, and arbitrage between official and unofficial dollar markets. That created distortions, discouraged investment, and strangled imports of parts and capital goods. Lifting controls and collapsing the dual rates is essential. The IMF-backed deal of 2025 opened the way to a more flexible dollar-peso peg. Reason 3. External imbalances and export dependency. Argentina's exports depend heavily on agriculture and raw materials. That leaves the country vulnerable to droughts, commodity shocks, and global price swings. Diversifying into value-added manufacturing, mining, including lithium, and services is critical. Also, building reserves so that external shocks don't trigger a crisis. Reason 4. Structural and institutional weakness. Political instability, regulation complexity, weak public institutions, and labor market rigidities add cost and risk to business. Reforming the tax code, simplifying regulations, strengthening rule of law, and attracting long-term investment matter. As the OECD observed, even with macro stabilization, Argentina still lags behind regional peers. Now, how can Argentina turn from crisis to sustainable growth? Stick to macro stability, maintain the zero-deficit rule, rebuild foreign reserves, allow the exchange rate to float more freely, keep inflation expectations anchored. Without macro stability, everything else fails. Unlock investment in high-potential sectors. Argentina's lithium triangle, shale oil and gas, especially the Vaca Muerta field. Agribusiness and auto parts manufacturing are engines waiting to rev up. For example, growth in energy and mining in 2025 is projected high. Channeling investment there can create jobs and export income. Remove distortions and open the economy. Reduce import barriers on capital goods, simplify trade rules, reform the anti-dumping system, which Argentina began to do in early 2025. Encourage public-private partnerships, quality infrastructure, and human capital investment. Protect the social fabric while reforming. One of the big risks is popular backlash. The austerity in Argentina has already raised poverty. Growth must go hand in hand with job creation, wage recovery, and protecting the most vulnerable, or reforms lose public legitimacy. Build integration and trust with international capital markets. Argentina needs foreign direct investment, dollar inflows, and strong economic ties. The deal with the IMF and improved investor confidence are steps, but converting that into sustainable flows and reducing dependence on borrowing is critical. In short, Argentina has enormous potential. It has the land, the resources, the people, but potential alone isn't enough. The country must execute, maintain discipline, open up, diversify, create jobs, and restore trust. If it does, Latin America's phoenix could rise. Now I'd love to hear from you. Do you think Argentina can escape its history of boom and bust cycles? What's the biggest obstacle in your view? Politics, inflation, resources, or something else? Leave your thoughts in the comments below. If you found this analysis helpful, hit like, subscribe, and ring the bell so you don't miss the next deep dive into global economies. Thanks for watching. I'll see you in the next one.